Google is holding its annual shareholder meeting today. The company is facing many challenges, including its exit from China, scrutiny from regulators in the U.S. and Europe, and a stock price that's underperformed the market. Joining us now with his outlook for the internet giant is James Friedland. He is senior research analyst at Cowen Co. The Wall Street Journal named him one of the best on the street for stock picking in 2010. So, Jim, congratulations and thanks for joining us. Let's talk first about Google. I mean, what's your take on the stock? It's underperformed. Do you expect it to gap up?
Well, it certainly has underperformed year to date. However, we do think the fundamentals remain strong. We think the search advertising business has a number of legs of growth to it, and we do continue to recommend purchase of the shares here.
All right, but Jim, one of the big questions is the mobile area for this company. I mean, what's the outlook here, and are we going to hear anything key on this front?
Well, they're actually making a lot of progress there with the Android platform, and really what that does is it gets a mobile operating system out there which makes it easier to do searches, and the more people that are doing searches, the more people that are searching on Google, and then that actually can become a nice leg of growth for them. Today we're just primarily searching on our laptops and desktops, and mobile will certainly be a whole new leg of growth, but that actually is already starting to pick up in 2010.
Are they making enough progress and inroads to actually compete with somebody like Apple here?
Well, they're not actually competing with Apple. In fact, Google is the primary vehicle for search on the iPhone and the iPad today. So the growth of the iPhone and the iPad absolutely helps Google. Google can be reached either by typing in Google on the browser, by the fact that it's the default search on the browser, or by people downloading the Google app. So there are many ways where Google's positioned in mobile today, both on the iPhone and the Apple platforms, as well as on Android and other platforms.
It dawns on me that if Facebook releases a decent search engine, everybody would use that rather than Google. I mean, they already spend a lot more time on the relatively young website. Is that a concern?
Not really, in that Facebook is certainly the leader in social networking. We don't expect that to change. However, search is really not what people do on social networking sites. Google actually had a deal with MySpace, and they found that they really just couldn't get users to search, and they couldn't monetize it. And we think that Facebook will focus on its core, which is really just improving social networking and selling display ads, which is an area that Google's in, but not a direct area. But we think that it's very unlikely that the two companies will compete head-to-head in Google's core area of search.
But the point is, Jim, people spend more time on Facebook than they do on Google, which I think is shocking because as soon as I turn on my computer, Google is the first thing that pops up, and it's the same for a lot of other people. Is there maybe the possibility of a cooperation here? Because if Facebook had a search engine that was anywhere near as good as Google, I think a lot of lazy people like me would probably use it while they were on Facebook.
They're really just two different things that they're providing to the user. With search, the reason people spend less time in Google is that the purpose of Google is not to keep you on Google. It's actually to very quickly get you to where you want to go, whether that's a social networking site or to do shopping on the web. However, with social networking, it's actually something where users are spending a tremendous amount of time just communicating with people that are friends, family, etc. And that can be monetized very, very well with display advertising, not really with search advertising. So they're very much complementary assets. And we've seen from the MySpace-Google partnership that users just don't search on social networking sites. So we don't think there's much of an opportunity there for Facebook in search, even though we're actually very positive on Facebook's future.
Jim, and you do have an outperform rating, just going back to Google here, on Google specifically, but the stock has been underperforming this year. It's down about 17% versus the S&P, which is down about 5%. Why that underperformance?
I think there are a couple reasons for it. One is that Google is probably transitioning from a company that was in hyper-growth mode to one that will still see growth, but growth in sort of the mid-teens on the top line once we get the cyclical bounce here coming off the recession. So there's probably a little bit of multiple compression going on, but at the same time, they are running into challenges. The regulators are starting to look at Google in terms of its market share. We also are seeing some controversy over the impact of their pullout on China, and there are just general concerns concerns as to where does Google go from here and at what multiple do you pay for it. We actually think at this level it's very attractive, but certainly it can easily be argued with 2020 hindsight that the stock did get ahead of itself in terms of where it was trading at the beginning of the year. So it was pretty highly valued. Now we think it's attractive.
You know, a lot of people are concerned about what their companies they own are doing with their cash, and obviously corporations, including Google, are building up so much of it. What do you want to see Google do? I mean, should they be paying special dividends? Should they be buying back shares? Should they be buying other companies?
I think what we'll see Google doing and what we hope to see Google doing is as that cash position grows, and right now it's about $25 billion, once it hits, call it 35 plus, you always want to keep a war chest around in case there's an acquisition you want to go out and buy, or just in case we run into more economic troubles. However, there's only so much you need, and there are only so many opportunities out there for acquisition. So we think that at 35 billion plus, they'll have to do something, probably or most likely stock repurchase. And I wouldn't necessarily expect to see an announcement this year, although it's possible. I think next year or at some point we will definitely hear Google start talking about buying back stock. We think that's the best use of their cash, borrowing. Yep.
All right. Going to leave on that note. Forgive me, Jim. Thank you so much. Jim Friedland joining us from Cowen Company.